Why do bank runs happen? What happened to SVB? And what's next for depositors? Well, what you might not know about banks, and really the entire U.S. banking system, is a lot of it is based on trust and confidence. You see, when you make a $100 deposit at a bank, the bank doesn't actually keep that $100 sitting in a vault just waiting for you to get it. The bank might keep $5 in the vault, and they lend out the other 95 because you know what? The bank wants to make money. So they lend it out to venture capital firms. We'll come back to them in a second. They lend it out to homeowners. And you know what? If they can't find enough lenders, we'll come back to that in a second too, then they might just invest it in some very safe securities like U.S. Treasury bonds, which are virtually riskless and unlikely to default. However, they could lose value. We'll come back to that in a minute also. You see, technically, the reserve requirement for banks is 0. So if you deposit $100, they might keep 5, but they don't have to keep any of it. They can just lend it out. And then what happens with the bank run? Well, let's say all of those investors of a bank simultaneously want all of their money back. The bank goes to its vault. They clear out their vault. They still might not have enough because they've loaned out the money. They've invested in treasuries. Then they got to sell the treasuries. They still might not have enough. And if they don't have enough, you know what? That's a bank failure. So what happened to SVB, Silicon Valley Bank? SVB, as you might guess, is in Silicon Valley, which is in California. It's the home of a lot of tech and venture capital firms. Silicon Valley Bank, SVB, purports to be the banker to the innovation economy. These are venture capital firms who are taking in money from investors to build products and services. And there's been a huge amount of investment in the VC business the last couple of years, a huge amount of cash. In the past couple of years, VC investing has gone from $144 billion in capital to almost $350 million in capital. So what do you think has happened to SVB? Well, that cash has to sit somewhere. So it's all been going to SVB, not all of it, but a lot of it. In fact, SVB deposits have gone from $70 billion to almost $210 billion in the last couple of years. They've tripled. So SVB, just like any other bank, takes that cash and lends it out. The problem is SVB had so much in deposits that it didn't have enough borrowers to lend it to. So it took it all, put it in treasuries. Treasuries are safe. The U.S. government's not going to default. No problem. It's a great plan. Except here's what's happened. Interest rates have gone up the past couple of years, and really just the past year. An aggressive interest rate hike campaign to reduce inflation. So now what happens? All those venture capital firms that found it so easy to get money, all of a sudden it's harder to find investors. So what happens now? They need those deposits. They need that cash that's with SVB to make payroll. So they start to take out money. And now SVB starts to look at its assets. It says, you know what, we might not have enough money in our safe. So then what they have to do, they look at those treasury securities. And they say, well, those are safe. They're not going to default. However, here's the problem. Rates have gone up. And what happens to the price of bonds, including treasuries, when interest rates go up? The price of those securities will tank. So they're not going to default. But that's only true if you hold them until maturity. If you want to sell them, they very well could lose value. The market price falls. You have interest rate risk. So what happened was SVB decided they were going to sell those securities in the hope of getting some cash, being able to pay depositors, maybe investing in something that's earning a little bit more yield. Now the rates are going up. And when they sold those securities, they got a $2 billion loss. And now you spook VC firms. It's a very tight-knit community. You have messaging boards with all these VC firms telling each other, take your cash out of SVB, put it with a larger bank, put it with somewhere safer. Now they all want their cash. And on Wednesday, March 9th alone, investors withdrew $50 billion in cash, a quarter of SVB's deposits. They don't have the money. They tried to raise equity, it didn't work. That's a bank run, just like I talked about. And wouldn't you know it, 2 days later, the FDIC took over. It was shut down, the FDIC took over. So what happens to depositors now? So depositors, some of whom have millions of dollars at SVB that they're trying to get out. Well, the FDIC, the Federal Depository Insurance Corporation, insures bank depositors for up to $250,000 per account. Okay, so the government will step in and guarantee $250K. What about the rest, the uninsured deposits, which for SVB were about 90% of their deposits? That's not unusual because a lot of depositors, for example, a depositor who has $1 million, only $250K is insured. Well, now the question is, will the government step in and back the rest of those uninsured deposits? On one hand, if they do, it creates some moral hazard, meaning an investor or a depositor will know, you know what, there's no risk with this bank, and encourages banks to do more risk taking, because if they default, you know what, the government will step in. But if they don't, now you have depositors at other banks of similar size who might say, ooh, maybe I shouldn't be with such a small bank. Maybe I should be with one of the largest banks or largest 5 banks in the company that's unlikely to fail. So now you might see a run on other banks, which is what you're trying to avoid. So as we sit here on Monday, what's going to happen next? We'll see. There could be an auction for SVB's assets. The government is talking about paying an advanced dividend to depositors on their uninsured funds. We could see a change in interest rates from the interest rate policy of driving up interest rates to reduce inflation. That might change in the coming months. Who knows? We'll see. Things could change by the hour, by the minute, and certainly by the day and by the week. Hope you found this helpful.